Hey guys, AKIL'S here. Welcome back to the Trading Coach Podcast video episode. So make sure you head over to Spotify or YouTube. That way you can watch the in-motion version of me. While you're over on YouTube, there's a lot of awesome content over there as well. Long form videos, which I do at least once a week. We call it the Trading Edge, where I show you the best trading opportunities that are on my radar for the week ahead. And lots of shorts. So many shorts I can't even keep count, but lots of quick trading tip content for you under the Shorts tab on the YouTube channel, so make sure you check it out. Today, I want to follow up on a podcast episode that I did a little bit ago. It was episode 1100, I believe, where we talked about how to have a better understanding of the market, and specifically talking a little bit about multi-timeframe analysis. Now, what I said at the end of that podcast was, hey, I'd love to hear your thoughts. I'd love to hear your opinions on kind of if you use multi-timeframe analysis and, the good, the bad, the ugly, basically your opinions. And if you shoot them in, maybe I'll create another podcast episode where I talk about them. And guess what? That's what we're doing today, right? So I put a poll out on my YouTube community channel when the original podcast came out. And the poll came back that 90% of traders use multi-timeframe analysis. And I want to share the views because it's one thing to hear it from me. I am just a man, a very handsome man. That was weird. But now I lost track. Gosh, whenever I compliment myself, I just get so flushed and I forget what I'm saying. But I am yet a man. I am but a man. I am a handsome man. But my opinion isn't the only opinion that should matter. And I think the greatest part about having a trading community, and that's what we preach over at Tier 1 Trading, is you get to hear different opinions from different traders, and then you can kind of get a full kind of idea of the different options that are out there, and then ultimately make your own decision. Because at the end of the day, just because I like something doesn't mean that you have to like something. There are so many different ways of trading, and multi-timeframe analysis could be good for one way, it could be horrible for another way, right? Even in my own personal trading style, there are certain styles that I use multi-timeframe analysis. There are certain styles where I just stick to a single trading time frame and have at it. So I think this is going to be a little bit valuable. So the first comment said, I used to, but I don't anymore. Or I used to and it definitely helps, but I don't anymore. And you may be saying to yourself, well, if it helped, why is this trader no longer doing it? Well, the answer was this. He said that I've just simplified the process such that I'm not interested in any other discretionary inputs. And what this means, or at least my opinion of it, is that this trader has become more systematic, right? Systems, whether it's trading, whether it's entrepreneurship, business, whatever, systems are key. And the simpler we can make the system, the easier it is for us to follow, or the easier it is ultimately to either automate or delegate. And those are the things that buy us time, and time is the main thing that we should be after as human beings, because we only have a little bit of it and we can never get any more back. So the goal is, how can I take full advantage of this depreciating asset before it's gone, and we're gone. Ooh, morbid. Sorry. Anyway. And this is something I've explored in my trading as well. So, you guys know I used to be a day trader. I started off as a swing trader, and I started off as an investor, went to a swing trader, went into day trading, and around the time COVID hit, right? Coincidence, right? I stopped day trading. And one of the things that I loved about stopping day trading is that it opened up more time. As my kids are getting older, I want to spend more time with them. I want to be more involved with their lives. I just want to do more things in my life that make me happy as well, because that is my goal of trading, especially as I reach kind of the second stage of it. And the next step that I always wanted to take in trading, I'm not there yet, is to find a very systematic strategy that works on the daily time frame. Now, not just price action trading, not discretionary trading, not the stuff you see me do now on the YouTube videos or in the live rooms, but I'm talking about something very systematic, as black and white as possible, rules-based through and through, something that will allow me to simply go to my charts, 5 minutes a day, see if I get a signal, no signal, take, no take, whatever I have to do, and then be gone. Because as I think about myself getting older and traveling more, especially as my kids get older, even with swing trading, I have to keep a certain eye on the market. Not as close as an eye as I did with day trading, where, day trading, I'm sitting here doing everyday stuff in life, and I'm like, right? Swing trading, I'm kind of doing everyday stuff in life. I got one side eye, so if I can do it. Right, hopefully one went over that way. I used to be able to do the thing where they go different ways. Anyway, as I get older, I no longer want to kind of be on vacation or be on the road and worrying about, hey, did that fill? Do I need to adjust targets? This, and that. I want something kind of very hands off. And this is exactly what I believe this trader is talking about. As he, simplifies the process, he's looking for less discretion, less analysis, kind of coming into one thing and saying yes, no, take, not take, and get out of there. So I definitely feel where this trader is coming from. The next trader said, yeah, I love it. I feel like it gives me a better view of what's coming ahead in the market. It also provides better historical analysis. And that's the main reason I love multiple time frame analysis. It gives me a bigger perspective, right? It allows me to, I can see kind of this area from my trading time frame. But if I take a step back, there's a chair behind me, isn't there? Yes. If I take a step back, right, my view all of a sudden opens up. And there may be information that I see there that I didn't see before. Information that could be very helpful in either maybe avoiding a trading opportunity, or information that could be very helpful in maybe trying to get a little bit more profit out of a trading opportunity. So having more information is always a positive in my eyes. I'm not saying, there needs to be a cutoff point, right? You don't want to be, trading on an hourly and start looking on the monthly chart, because then you'll get overwhelmed in a different type of way. And I get those questions a lot where it's like, Akil, are you worried about what's happening on the monthly? I'm like, nah. Like, why not? I don't trade the monthly. I don't care. Like, because when does it stop? We go to the yearly, whatever. So there needs to be a kind of a limit to that. But having bigger perspective in whatever that means for you, I think is very beneficial. And that's one of the benefits of doing multi-time frame analysis. Now, I'm not going to read through all of them. A lot of them are very similar, so I don't want to be repetitive. But there was another one that really spoke about how multi-time frame analysis or higher time frame analysis really impacted their day trading in a positive way, because they had a better eye for the lower time frame movements that were about to happen. And I would say this. Day trading is interesting, and there's different ways to go about it. There is trading a set portfolio. There is kind of doing it like a market scan, right? And we're going to talk about the market scanning process for a little bit. So as a day trader, we're typically on the lower time frames. I would say maybe hourly is a reach. 15 minutes and lower would be considered day trading, in my opinion. Trades that last maybe minutes to hours. For me, I use the 15 to 5 minute and the range bar charts, or the tick charts, to do my day trading. And the thing about day trading is this. We only have so much energy. I learned a very expensive lesson that if you watch too many pairs or assets during your day trading, you can get overwhelmed, right? Because moves happen very, very quickly. You have to take them very quickly, set up stops very quickly, set up entries very quickly. And you can imagine if you're getting 5 signals at the same time, you're getting overwhelmed and you're making mistakes or you're missing something, and that's going to be a negative. So what I ended up doing in my day trading career is I started limiting myself to how many trades I can pair. How many pairs I can trade. There you go. I'm all backwards. I haven't had my coffee yet. I'm tired, right? And for me, that number was 8 max. 6 was my sweet spot. And I had 2 choices. One is to create a portfolio, say I'm only going to trade these 8 pairs every single day, and I'm not going to look at anything else. Or increase my opportunities in the market by kind of looking at everything and picking out the 8 that had the most potential. And this was my way of scanning the market as a day trader. What I would do is I would do my morning analysis, right, about an hour or so before my active day trading day started. And I would look at a basket of probably like 20 something pairs. And what I would do is I would kind of rank them, right? I would analyze them. Some of them would be like, nothing. I would take the ones that I thought provided opportunity, or thought that they would provide opportunity for me during the day. And opportunity for me is based off my strategy and what I'm looking for, whether it's a structure trade or whether it's a continuation trade. So what I would do is I would go through and analyze all these different pairs, and I would rank them, and I would put them in a ranking, slide them over. And before my day trading day started, I would focus on the 8 pairs that gave me the best day trading opportunities or potential opportunities, and I would lock in on those. So for me, the higher time frame was very important in doing so, because if I'm just looking on the day trading time frame, as I mentioned before, I'm just seeing a piece of the puzzle. The higher time frame allowed me to see that, like, hey, this one has a 200 pip potential move, or this one looks good on my trading time frame, but we're really right above structure, so I can't really do anything about it. Just having that different perspective and that time element to see what the bigger trend is and make sure I'm aligning myself with it, or make sure we're at a key level if I'm going against it, was very key in me deciding what pairs I traded, and therefore essential in me finding high quality trading opportunities every day. So wanted to share a little bit of a different episode where I'm bringing the feedback from you guys, the viewers. I love doing it. You guys know I read all your questions and comments, so never feel shy about shooting them in. And of course, before you leave, do me a favor, rate the show, review the show, 5 stars if you think I deserve it, and make sure you share it with the community as well. If you think the Trading Coach podcast has been a benefit, a help to your trading, if you have a trading buddy, if you have a trading buddy, say, hey, check this kid out. It's kind of cool. All right, until next time, plan your trade, trade your plan. See ya.